All in the face, all in the video. Take that, take that. Morning, everybody. Sorry for, well, not really sorry for being late, but sorry for being late. I drove back last night and I didn't get in until like, I would have made good time and would have got in at 3, but I ended up getting in at what, 4 ish. Then stayed up for an hour, working on the show a little bit, fell asleep, woke back up. Here we are. So that was my night. How was your night? How's your morning? Good morning, everybody. Hope everybody's all right. Hope everybody's been doing good this week. But we're in a 3-day weekend. Um, so hopefully you have a relaxing weekend, a studying weekend. Yeah. Uh, Study up. Get ready for exams. Let's see, we're going into the end of February. So hopefully you all have at least picked a path at least, or looked at some choices and narrowed those down. Um that's going to be important because I think it probably take the average person, probably, and I say average person, which is saying in general, on average, not the average person, but in general, probably take you about 3 months on a certification, maybe 4. So if you do it quarterly, if you divide it up into quarters, uh, you could average anywhere. You could average 4 certs a year, but they'll be pushing it if you're taking like more than 3 months, 4 months, 3 or 4 months. So give yourself some grace there. If you get maybe 2 certifications in a year, I know people that do that just do that's all they do is cert. But again, it's understanding how you learn and so forth. Let's get some shout outs this morning and then we'll roll into some stuff. Samsima, good morning. Sasha, good morning. Adele, good morning. That's right. Well, deca millionaires and billionaires, who whatever comes first for you in your portfolio. Um, Tashika, good morning. And those that are just watching, make sure you hit the like button, subscribe, notification, and make sure you also share the content out. Nevertheless, if you're your first time here, you don't know who we are. We are Women in Linux. Let me get my mouse over here. There we go. We are Women in Linux. We can be found across social media at Women in Linux. If you are looking for us on um, uh, LinkedIn or Facebook, it is the same thing. But nevertheless, let's get started with this. You can find us on womeninlinux.org. If you want to connect with us, you can connect with us always on Slack. I'm sure by now everybody should know that. Drop down here, uh, put in your email address. You can then connect with us on Slack. Another thing I want to bring up, because a lot of people always ask these questions. If you go to meetup.com/women in Linux, you can find us there too, right? You can see right here where Tech Stocks and Job has been posted and whatnot. Any of the events that we have going on, we post them here too. So if you don't join us on Women in Linux on our YouTube channel, at least here, and you can find out what events are happening there. The only thing that's not posted here is the rest event. That's not something that I'm hosting. I'm actually doing that with someone, but I do hold the link, right? I do share the link out. Last week I missed starting the link. Well, we missed, let's say that, between D and I starting the room up to get it done. You all still got it done in the Zoom, so that's good. But that's, I want to point that out. So you all don't have to ask me, are we doing anything, or if it's something I missed or whatnot. If you sign up to uh any of those the Slack, not the Slack, but the meetup.com or the YouTube channel, you're gonna get a notification of what we're doing, when we do it, who's on it or whatnot. And sometimes it may be It may be I talked to somebody on Tuesday and they're like, "Oh, I can go live in like 2 hours," and I'm like, "Okay, well, we're gonna run with that," and it may be that day. So, again, make sure you subscribe to us on Meetup.com. That is probably like the most truest place of info where we would always post, because it's such a, it's not to say that YouTube isn't a national thing. It's just where we got started at. We've always used it. We always keep that up, especially when you go out of town and you're looking for groups and trying to see what they're doing, or if they're having a meeting or in-person meeting. That would be where we would post it at. Not necessarily in Slack per se. We'll probably reiterate it in Slack, but you'll get first dibs on meetup.com. So that's my thought process on it. What my mouse at? Let's get you over here, mouse. Yeah. All right. So also, if you want to donate with us, I don't know, D's got to put up the new shop. I don't think the shop is up yet. Um, donate with us. You can donate your time. You can donate by sharing content. You can donate by tagging somebody in with the content or what have you. Also, you can donate with money. You can also donate by um, coming onto the show and seeing your respects of what you've learned so far or what have you, right? So if you click here on donate, you'll see that we have, here we donate. Here we also have Amazon Smile, but I don't think D ever posts that. I guess she was like, they'll never give out nothing. So I don't think she posts it. All right. So let's get started this morning. I don't have my notes up right now. Give me a minute to get my notes up here. Let me see. I can go right here. Thought I had them up, but I guess I did, and I closed the link out. Did anybody doing any good investment this week? Did you get any dividends this week? There, because dividends have been paying out this week. Um, Hopefully you got your dividends. You got your ends. I don't even have my phone up. I can't even tell you what paid out for me. All right. So I want to bring this up first and foremost, and then we'll get into all my other stuff. But let's go. Did you all see this? The U.S. SEC to tighten insider trading rules, boost money market fund reliance. So I don't know if you've been watching this. Um, oh God, is it Nancy Pelosi? Is it her? I don't think so. Let me think about this a minute. All right. So remember a while ago I talked about how people are watching government officials in order to make investments. All right. And one of the bigger ones, I forget who it was. See, let's I'm going off script here. Government officials. I forget the website that I had put up. It was been a while. Government officials, stock trades. What was that? One bit. Well, Business Insider might have the actual thing, and this is where it comes on, right? Um, but it's an actual site, and this is super huge for me right here. It's an actual site. I forget what that site is. That we can go through and here it is. Center says Stock Watcher right here, right? So 54 members of Congress have violated a law designed to stop insider trading and prevent conflicts of interest, right? This came out on January the 11th. And here it is that we're talking about. So one of the senators was um, actually had made the meme was like $4 or $5 million right? From their trade. So a lot of if you go follow a lot of the people on Reddit and so forth and dig into some of these into this, you'll see it on YouTube, Reddit, and any other of the stock market channels and stuff that you watch, right? And so they're watching them invest. They was like, so there's a whole thread out there about I don't think it's Nancy Pelosi. It may be. Let me look it up here. Let's see. I don't think it's Nancy though. Let me look it up. Let's see. Is it Nancy? Yeah, retail. Yep. It is her. Her and her husband. Right. And I talked about this, and they brought this up again this week. That's why I'm mentioning it again, and because of this article. Right. Uh, Retail traders are mirror investment, and that's Pelosi and her husband, whose stock picks have been strong performers over the last 2 years. Right, and this one that came out October the 7th. Let me pull up the other one that I was looking at. Let me see. Nancy. Now somebody asked, is this good to watch? Well, the reason why it was one of the things why it was created is so you can see where the senators are putting in stocks. I mean, putting their money at, right? So you have Congress and you have the House as well too, right? So you not only have a Congress stock watcher, you got the Senate stock watcher, where they're putting their money at. Who's again, lobbyists, who's on the floor, um, and so forth, right? So yeah, so here, let me look. See House stock. See, let me find it. Okay, so here's like one from Reddit, right? So here we go. Latest trades. Right. And this is a whole thread. Should I be doing what she's doing? She has 0 milliseconds ping on these trades. You're using Taco Bell Wi-Fi, whatever. Blah 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 blah. Let's see, and they just go on like, see, this is from 15 days ago. They think if we know about Pelosi's insider traders trades sooner, then somehow it'll be easier to profit from copying them. But the feed freezing will drive up the stock price, which it does. So for people need to get off their lazy asses and blah 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 blah. So they're trying to say that she has insider trading. So again, when we come back to this article here, and the title of this article, right? Wherever that title went, there we go. USC to tighten insider trading rules to boost money market fund resilience. And when we see this one back on January 11th, 54 members of Congress have violated a law designed to stop insider trading and prevent conflicts. And you think they're not playing the stock market? You think they're not playing inside of the cryptocurrency and so forth? Yep, Latrell. Yep, Senator Kelly oversold at least 18 million or more in stocks before the coronavirus crash. Yep, that was one of them. Right. So again, I'm just providing you breadcrumbs, and you can piece the stories together. This is not financial advice. I'm just simply saying, follow the money, right? Follow what people are doing. You don't have to make the investments. You can go in and just put things on a watch list, right? Uh, I don't know if you all follow ARK Invest at all. With the tech sell off this week, the stock market has been down for about the past 2 weeks, right? Everybody's draining, right? So, um, again, looking for safety nets of where to invest and grow your money, right? But this is just from a tech stocks and jobs perspective, right? So, but I wanted to bring this up this morning on what they were saying in this particular article right here. Let's get into it a little bit. Um, and okay, say the agency. Let me see right here. Right. The U.S. Securities Exchange Commission, or SEC, on Wednesday proposed a tightening of legal safe harbor that allows corporate insiders to trade in a company share, and other rules to improve the resiliency of the money market funds. The agency unveiled measures to increase transparency around share buybacks and the complex derivatives of this at the center of the New York-based, I guess it's Archegos capital management meltdown earlier this year. Let's go. We can go look them up, right? Let me get that out right there. I don't want to click on it. I just want to grab it. All right. So here we go. Timeline. Right. All right, the meltdown. Let's see of this one. Tiger Asian manager Bill Wong has sent shockwaves across Wall Street and drawn regulatory scrutiny in three continents after paying $44 million to settle U.S. insider trading allegations. Wong in 2013 reinvented Tiger Asia as Archegos Capital, a single family office. Remember, I talked about that single family office, right? Remember, we spoke on that. I had to do a different show on that. Erica Williams covers this. I've covered it. I even sent D a video about the single family office, and probably we could probably hint at a little bit more on the next show, um, and go from there. So again, hold on, D's like I need to forward my notes. I thought I did it already. I'm sure I did because I started these 2 weeks ago. Hold on, D. I'll send it to you. 1 second. Okay. All right. So back to here. All right. So Archegos was little known until last week when a slump in the value of its leveraged equity bet sparked a liquidity crisis at the fund, which in turn set off a scramble among Wall Street banks that have financed the trades to start unwinding them. The individual banks have not discussed the sequence of events that led to the dramatic fire sale, a spokesman stated. And that was like April the 2nd that one came out, and then they go back and start talking about on March 24th what happened. And I'll put this link, get this link to D, and you all can go through it. But this is what this article is talking about here. It said a slew of long-awaited changes mark an SEC milestone. Um, uh, Chair Gary Gensler, who has outlined an ambitious agenda to crack down on corporate wrongdoing, improve corporate governance, and addresses inequities, or I guess you could also say inequalities, right, in the markets. The changes which are subject to public consultation, which affect a swath of corporate America, from publicly traded companies and their top executives to banking groups, which I knew this was going to come up, and asset managers. Remember we talked about these asset managers just last week when we were talking about who makes a hundred, was we making 100 million a month, right? Including BlackRock, Vanguard, Fidelity, and Goldman Sachs, right? And this is the pro tightening is 10b-5-1. Corporate trading plans, in particular, was pushed by progressives who long criticized the rules, right? So if you really want to look at this right here, I will grab that and go here, and we'll start reading, right? Here it is on Investopedia. Already at it. January 14th, right? Um, my screen's too big. Oh no. Here we go. All right. Rule 1051 be established. Let me see. What does that look like? Can y'all see that? Yeah, yeah. All right. Security exchange, blah, 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 blah. Okay. Permits holders to sell a predetermined number of shares at a predetermined time. Many corporate executives 10b-5-1 plans to avoid accusations of insider trading. And then they go more into the rule. Now, let me get these links over to you, and we can go on. But I wanted to make sure that I my mouse at? Make sure that I got this out to you, and at least so you can know about it, right? So we're gonna put 10B 5-1. And why is that important to you? Well, it's important to you from the perspective of this. Maybe you want to start a fund, right? Or maybe you want to one day have a company IPO, but whatever the case may be. At least like right here where it says it's not uncommon to see a major shareholder sell some of their shares as regular at regular intervals. A director of XYZ Corporation, for example, may choose to sell 5,000 shares of stock on a second Wednesday of every month. To avoid conflict, the Rule 10B5-1 plans must be established when the individual is unaware of any I don't know what MNPI is. I gotta look at that. It sounds like some taxes or something. These plans usually exist as a contract between the insider and their broker, right? So that was that one. And let me get the other one in case you want to read about this article about that fund there. And go from there. And drop in the comments if this makes sense to you, right? I don't want to give you stuff that's gonna be confusing for you, right? Um, I want you to have valuable information. So when we're going through things, let me know if you don't understand something. That's not why I'm here is to confuse you. I'm here to make sure that you understand things. All right, so um, we talked about cars. I should have brought this. I should bring this up on the other show, but it's on my notes right now, so it is what it is. Right. Um, Porsche appoints Aisha Coker as vice president of marketing over at Porsche Cars. Here she is right here. We talked about cars last week. Wanted to make sure I brought that up. I thought that was cool, right? So, and see, Coker has overseen the operation of the Porsche Track Experience, Porsche Travel Experience, as well as Porsche Experience centers in Atlanta and Los Angeles. Right, so that's pretty cool. Just wanted to highlight that. But what does that mean? Which is something that I was actually looking at. D and I was looking at this when we were looking at um, influencers and how things became influenced us. And it was a conversation that I actually had this week. Actually, yeah, it was this week and yesterday, and it was more or less like I don't know. Do you all um did you all follow Tommy Hill figure back in the day? And look at how, and you can even look at all the brands from how hip hop migrated to mainstream media in terms of how brands marketed towards the urban customer, and what that looked like. Um, looking at, and it's sidebar. This is where it kind of gets funny at, because we say we need to build our own, we need to do this, we need to add this, that, and other, but it'd be us that get in positions in these companies that create different ways to market to us. So then we become the number one consumer of that brand, right? But we get in positions and market towards us. So it's a catch 22. I just find it interesting when we're talking about those things. But nevertheless, let's move on. I won't dive into it because then it could be said I'm just doing my job, right? I'm hired to do my job, and it's just not you we market towards. You're not the number one base that we're looking at, right? That'll be said as well too. All right, so next thing up, let's talk about Intel. Intel, the chip, or you could chip maker, you could say that. All right, So Intel drops a bomb on the robotaxi industry. Despite most investors focusing on Tesla for robo taxis, Intel Mobileye is currently in volume production of its camera only L2 autonomous supervision system, beating all competitors to the punch. Move over Mobileye announced first the world's first L4 consumer vehicle launching in as early as 2024. Mobileye has substantial technology and the first mover advantage. If Tesla bulls, meaning like if people go on Tesla bulls, can contribute to the $1 trillion market cap for their company, non-existent robotaxis, then initiate Mobileye as $1 trillion stock right now. So here we go, right here. Um, the Intel company, their car, right? Right. Mobileye can hence become one of the greatest investments in the coming decade. So let's go look up Mobileye. Yeah, Mobileye, Intel. All right, let's look at images. All right, so the driving unit right here. And yeah, we'll scroll up a little bit. Let's see. Intel paid $15 billion for Mobileye back in 2017 as part of its race to diversify into newer markets for chips, right? So let's go back and see if we have some other info on it. 15 billion, and these is what I see for right here. So this is over in, yeah, Intel's Mobileye will launch a robo taxi service in Germany in 2022. So we're here, right? And this was September the 20th of 2021, and this is what it looks like. Mobileye, Intel owned company specializing in chips for vision-based autonomous vehicles. All right, so let's go look at vision-based autonomous vehicles. Right, we heard of autonomous vehicles, but let's look at vision-based. All right, here we go. I want the video of it. That's Tesla. Here we go. I don't want to do the whole thing. Let's go here, and this is back in 2017. This was announced. Oh, this was over at it's like OzCon. But it's the AI conference for them. Let me see if he got a. Yeah, he do. He has some clips in here, right? So again, if we looking at it from a technical standpoint, right? And I always talk. This is what we talk about: tech stocks and jobs. Here you see the actual hardware system. So again, when we're looking at this, who's making the hardware? What OS you think is on there? Probably something a slim down version of Linux or RTOS or something of that nature. And then we have the sensing, the perception, and the decision. And then here is all that being on the cloud platform, right? And then here's the training with AI, the data storage, right? Because somebody got to take these pictures, quickly and do an analysis on them and get that information, right there in the car with you as you drive, right? And it's probably in the car itself too, right? So all right, so here real time, from the satellites, right? Oh, we got to get into that one too. Did y'all hear about the John Deere autonomous tractor? Did y'all hear about that? Oh, I'm getting sidetracked. I'm bringing it up now. Yep, autonomous tractor. There's a video out there for it and everything. I'm gonna hold that. We're gonna stop right there. We're gonna come back to this because I want to talk about this platform real quick. All right, so we got again satellite. Remember, a lot of these satellites go out into space. They get translated back to us and so forth, right? And D has the ticker symbol for Intel going across the screen, INTC, right? But again, yeah, again. So this is 2017. This was talked about. And I've talked about LiDAR as well too. When we talk about talk about this, we talked about port as well too, for 3D imaging and so forth. There was one more that we talked about, but I just want to talk about. I just want to show the technology behind it, right? So when you're looking at these stocks, right? Let me go back over here. The questions I would ask is, okay, who is also other players in the GPS, who's also the other players in the OS and the hardware, right? We're talking about the chip, but then there's the hardware as well too, that chip has to sit on. What makes up a circuit board, right? So those are all players when we start talking about the stocks, because you'll hear little small things like, oh, Intel or such and such when they did a partnership with someone because they're gonna start building, like we saw with Volkswagen, partner with someone because they're gonna start building out, their EV systems and so forth, right? So they need that leverage, right? And they don't want everybody else getting that leverage, right? So let's look at John Deere real quick, and then we'll go to yahoo.com to look at um the uh the stock for Intel, right? Look, nobody's driving, right? So the goal here is you actually have a module that you can go and sync up with, and you can control your tractor from home, right? You can just set it in and forget it, right? Um, Geolocation and the whole nine. And so they have a whole series coming out. Suppose you need to go run some errands while your tractor tracks, right? So again, senior product manager there that's talking, but I just wanted to make sure we saw this, and we'll go look up John Deere and Intel. So let's go over here and do that right here, right? So let's go to yahoo.com. Um, Again, they're predicting that could be an influx of $1 trillion for Intel. INTC, and then let's look at what Intel has been looking like over the past 6 months. We've been down. We've been getting hit on stocks, but if you look at this past 5 days, you can see there was a ramp, and I forget when the announcement for Mobile Eye was for them, and then you can look at a 5 year, right? Let's go max. So we had a big high back in 2000, and it hadn't got back up there. It's been trading around. Looks are around about in 50. Let's see, 55, 62 was at one point. They're steady. Again, they've been around since '84, right? Just one of those ones that's just been around. Do they have dividends? Looks like they got a dividend yield of 2.53%. Right. So they do have some dividends on that. So let's look up let me see. I had brought up my Charles Schwab. Let me go look at Intel real quick. INTC. Let me see. Let's do research. INTC, and then I'll bring it over and look and see what they got. Intel Corp. All right. All right. So their dividends over the years. So they've been increasing. And um, somebody find out. We're gonna ask that question again. Is Intel an aristocrat or king? So they have an increase over time. They had a dip here, right? 5% increase, but look like at a $1.39, and I wonder if they're quarterly. So yeah, they're quarterly. So they quarterly are giving out 34 cents or 35 cents on dividends. So January the 21st of 2021, they gave out 34 cents, and then yeah, 34.375. So they've increased over time. Remember to be a king or aristocrat. you have to have an increase of dividends over a 25 to 50 year pattern. So find out if Intel is a king or an aristocrat, right? King or aristocrat, and drop it in the chat for me, and we'll keep going. All right, so that's one. Let me get my mouse over here. Where am I? There we go. Pull this back over. Put that in the background. All right, John Deere. All right, let's go look up John Deere. What is the ticker symbol for John Deere? Let's go here, John Deere. No, no ticker symbol. Are they privately traded? Can't be. I don't think John Deere's privately traded. Okay, okay. Here you go, Deere Company. All right. So let me see. Do they have a ticker up here? Let me just go back to Yahoo Finance and type in Deere Company. Go DE. D. D. All right. So that was one day. Performing. Look, they've been up and down all week. A month out. They had a big surge here. A big surge right there. From December 27th. I think that might have been when they announced they're autonomous, because this was January the 4th. So that's probably right in line here, right? Of what we see right here, January the 4th, right? That's right in line with what we see right here. That announcement of that autonomous tractor and the whole product line, right? And the whole product line. So let's go. Let me go look up Deere and Company on what you call it, on Charles Schwab, and let's see what kind of dividends they're giving out. Let me see. Do they have it? DE. Yep, yep. Let's look it up. Come on, use right there. Okay, Deere and Company looks like this, right? Let's see. They got some dividends. Okay, they've been pretty. Look, they're on the down. They're on the down. So there was 4%, then 0%, then 0%, then 14%, then 11, and then 3, and then 3, and now 2.85 as of last year. So their dividends decreased from let's see, we went 90 cents. Let me look at 2020. So it's 76 cents. Then we got 90 cents. So okay, that rose 90 cent, 90 cent, and then 105. So the next one coming up should be in, looks like there's occur in, let's see, announcement. Okay, they make an announcement, then ex dividend, and then payment, right? So it looked like they're making an announcement in February, what that looks like. So hopefully that gave them a boost for John Deere. You can put them on a watch list to see what their dividends kick out, right? See what that looks like. So that was DE, and the first one was Intel. All right. So this, I found this one to be interesting, because we talk about pre-IPO investment. Have y'all ever heard of this app called Rumble? Pre-IPO, creator friendly platform. Um, a necessary rival and interesting buy. And we'll go look it up. Rumble provides interesting alternatives in big tech media landscape, increasing perceived partisan and censorship in the U.S. The company has a favorable revenue sharing schema that benefits content creators, and has shown very strong growth metrics. Right. I will go to it in a minute. On the 1st of December, U.S. based financial services from Cantor Fitzgerald. Um, Canada-based Rumble is merging in a SPAC called CF Acquisition, CFVI, at the enterprise valuation of 1.2 billion, which with a goal to go public on the Nasdaq. Rumble has a neutral, built on premise for the small creator. Comments are amplified like ratios and so forth. So, let's go look at Rumble. Um, Let me see. Yeah, we can look up Rumble stock, but see here. Our RMBL is trading at 37.9. Let's go over here to Yahoo. And I like to get it all in one picture so you can at least see. So 5 day, 1 month, 6 months. I'm not sure. See, they came alive in July 15th, so of 2021. So year to date, they're down, got a big drop. But we've been dropping all week. And they're not even a year old. So 6 months probably gonna be your most accurate uh sign there. The 12th, I mean November the 12th, and then now at 37. They was up here. Right? But let's go look at Rumble in terms of their website. Let me see. Rumble On is I guess the name. Let me see. Rumble On. And we can look at John Deere. We should have looked at John Deere. But here we go. Rumble On. Is that the same one? It can't be the same. Because that's not a sheer thing. Hold on. Where Rumble at? I wonder if they went under CFVI. They might have went under CFVI. Oh, let me continue to read here. That ain't it. Rumble On sounds good though. Oh, it's ticker blah 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 blah. This content creation. Where is their ticker? Let's look. Let me go over here. Type in ticker. Oh, I guess it is ticker CFVI. I got the wrong one. But Rumble On did sound good. We'll look at them too. Look what we discovered. Okay. CFVI. Then they got warrants. CFVI warrants. Right. $12.30. All right, let's go. We had a little dip there and then back up. I wonder year to date. Yeah, see, they don't have a whole year. They came out in April, so that makes it about right. But it looked like they was on an increase, and then they had a dip right here. I don't know what happened on January the 14th, and then they shot back up, right, and then they came back down. So this is their level right here, around about $12 is their looks like their average, right? $12.30, right? So when we look at um, this pre-IPO, let's see if we can find the pre-IPO. I wonder if they're requiring you to um, be an accredited investor. Let me go back to that site here. All right, so let me see. Um, Let me go. All right. It's difficult to get a comprehensive read on U.S. content consumption preference. There simply no way to accurately measure the taste of millions of consumers. One means to get a sense of this through surveys, so forth and so on. Um, Let me look and see if they talk about more of their stuff. And this is super huge for me right now. Do 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 do. Recent news reveal a year on reduction in audience across the board. Um, Primetime TV, so forth. Total daytime TV, CNN, blah blah blah. I'm looking for what I'm looking for is not who their competitors are because they got a list right here, right? Facebook, YouTube, Twitter, Instagram, Reddit, TikTok, LinkedIn, Snapchat. Do people still use Snapchat like over TikTok? I don't know. But they're talking about the ages right here. 65 and older are not on Snapchat and they not on Reddit. Of course, you all lead the way here from 30 to 49. Yeah, I can see these two age ranges right here, most definitely using everything. Yeah. But my mom using TikTok and hopping on LinkedIn, not gonna happen. Um, and it shows right here who's consuming, right? Who's consuming, right? And then if they're Republican or Democrat, that's funny. Okay, YouTube versus Rumble. All right. Outlining of political positions in the U.S. become a germane when considering the fact that YouTube's parent company, um, Google put political action committee, routinely donates to political campaigns. In fact, and I talked about this before. If you ever go look at and see who's donating to what, I have never seen one company donate to just one total party. I see them donate to both parties. Yeah, I'd say that the Rumble On is not the same company. I'm just not getting it if you posted it in the back. Oh, where my mouse go? All right, here we go. I'm trying to find. Here's a breakdown of what they're using. I mean, who their users are. Right, we got 197 million people using it here. Of course, we're not going to outnumber India, but hey, right. All right, so let's go find Rumble and see what's the technology behind them. Let me see, will it just come up? Of course, it probably won't. Oh, it did. Awesome. Okay, this is their website. This is their website, right? Content, kind of like what you would see on Vice. All right, so let's go. Let me move this out my way. Our team, and then we'll go look at developers. So here's their team. Head of sales, CEO and founder, CTO, content officer, chief financial officer. I always like to look at the team. All right, and then developers. So I guess if you're a developer, you can grab and start using their API. All right, let's see about us if they have their job somewhere on here. And if not, we'll have to go on LinkedIn and look and see if they got any jobs posted. Let's go Rumble. And then, yep. All right, so they got software, senior software engineer, senior front end engineer. See all jobs here. Um, enterprise sales engineer. Um, I don't think, yeah, these aren't the same, but right here, technical writer. I can see that. So a technical writer, fully remote. Um, see, despite the pandemic, product market fit, we're already selling a lot with hundreds of paying customers. From mid market to large enterprises, they have a 4% match in their 401k. You'll get a platinum medical, vision, dental, life, and short term disability at 17 cents per month for a family of two. Um, Let me look here. What else they got? They got a flexible vacation policy, a competitive salary, and equity compensation. Because, um, and then I want to go here, not the sales, but the front end. Let's go to the back end because that's what I want to know. All right, so let's blow this up. So, a little bit. All right, so um, tablet in the way here. All right, so blah 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 blah. Product fit, blah blah blah. Okay. So they're on the back end. They have Golang, Postgres, Linux, and AWS. Right. Use developer standard tools such as Git, issue tracking, code reviews. Collaboratively build Rumble platform and maintain its performance. That's it. So they look like they're in AWS. They're using Linux. They're probably, of course, the CI/CD pipeline, and they're probably using Go for their applications. So I don't know what they're using for their CI/CD in here, but I would imagine it would probably be either native to AWS or they're using GitLab or GitHub or Travis or Circle CI, right? That's what I would go with for them, right? And then senior front end, down here, uh, 5 years of programming, heavy front end, HTML, CSS, JS, ACT protocol. Extensive experience with design tools, either as a designer yourself or working with designers through platforms like Figma. And I don't know what Figma is. I've never heard of it, but I'm sure we can look it up and see what it is and go from there. So this was Rumble. So they are, their ticker symbol was CFVI, right? CFVI. And then we also know that their back end is AWS, Linux, Postgres for a database, and that they're into content creation, right? So they're looking for a technical writer, a back end person, and a front end person. Right? So those are the main things that we know about them. I don't know if anybody has posted on Glassdoor. Feel free to go down that rabbit hole to see if somebody posted on Glassdoor to talk about what it is that they actually if they like working there or whatnot. So you say when would a meetup be posted? We had a meetup on Wednesday. I'm not sure. I don't know about for this week. I don't know if that's what you were referring to. It may be what you're referring to. I'm not sure. All right, the next company we're looking at is Basis Global. All right, so Basis Global, one-click checkout company, Bolt ushered into a decacorn territory. They raised 355 million in the Series E. This is posted as of January the 14th. You see, boom, 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 boom. All right. So let me see. Did they talk about them up here? No, they didn't. We'll go look at it. We'll go look up Bolt in a minute. All right, here we go. Bolt raises 355 as an online checkout war. Bolt, and again, there's two Bolts, has raised a huge round of capital that pushes its valuation to 11 billion. Bolt provides an online checkout solution for companies. It competes with variously with Fast and Checkout.com, which just raised a billion, which raised a billion at a 40 billion evaluation. You can argue that there is separation between the players in terms of where they sit through online payments and checkouts, but overlap appears increasingly material. Right. All right, so then I'm keep going on this page, and then we'll go back and check out Bolt. Dacity, I guess Dacity raises 15 million to help companies leverage e-com data. Dacity is a startup, and we're gonna look up Bolt too. And Dacity helps customers aggregate their information from various e-commerce platforms, such as Shopify. Right? This is in the EV space in India, the cannabis market. TechCrunch notes the start, blah, blah, blah. The healthcare market has a few, for example, and now that cannabis industry as well, thanks to Vangist is what I think, which raised a $9 million on the Series B, right? So let's go up here and look up Bolt. They said Bolt, not this Bolt, but that Bolt. All right, so we'll look up Bolt Series E. Let's look it up. That'll be our search criteria. I want their website now, right here. All right, so here's their stuff. Let's chop down here and check out jobs. See platform, contact about those careers. We're hiring. We know. Search opportunities. Okay, so if we went down this path here and looked at engineering, here's the back end in DC. Let's look at the back end because it tells us about the platform at least. See, passionate about work with passionate, smart, ambitious engineers who built systems at Uber, Airbnb, Facebook, and Google. Technologies, boom. I like how when they separate it out. Golang, GraphQL, Docker, Kubernetes, AWS, TypeScript, React, Terraform, and major e-commerce platforms, right? So here we go, right? Golang, Docker, Kubernetes, and AWS. So probably EKS, if they're being cloud native and not building their own. Using Terraform to probably build modules and to do a deployment. Golang again and GraphQL when we're talking about probably some stats and applications being pushed. TypeScript and React as well too, right? And all this get pushed onto Kubernetes platform, right? They only need you to have 2 years of experience. They're remote, unlimited paid time off, gym, wellness, cell phone reimbursement, monthly team events, and paid parental leave. And that was Bolt. Let me go back over here. They're looking for data scientists, which would make sense to me. Engineer managers, front end managers, IT leads, lead security automation engineer. If we drop down here to see 7 years of SecOps, um, see ability to communicate with upper management, executive level lawyers, information security, and non-IT colleagues as well as third parties. Right. Let me look and see. All right, here you go. You enhance your current monitoring systems with Datadog systems. They're using Datadog. Develop orchestration and automation between security tools to react to certain security incidents using security automation and orchestration. SOAR. Develop solutions and mitigate security vulnerabilities, evaluations, and play war games with the red team, right? You'll probably be on the purple team, probably looks like with this one. And we'll go from there. Let's see, where is my mouse? Here we go. All right, so these. Did I talk about the ticker symbol for that? Oh yeah, I did. Well, no, they're not. They're not public yet. Bolt. Oh, and the other company was Dacity. Daasty. E-commerce. Let's hop down here. You could probably start imagining what that looks like. Job wise, join our team. See all open positions. All right, analytics. of the top product sales, software development, full stack with Rails, a lead technical recruiter as well too. They look like they're out of San Diego or remote. Let's look at the data modeler. Let's see if they got any hint of experience with Snowflake and Redshift. Right, that should give you right there Snowflake and Redshift. To do. I'm just looking up things that stick out to me that you should automatically be like, oh, that's where they're at. 40-hour week. They don't mention their stuff, but let me go back and look at their front end. Was it a front end that I saw? Full stack is what I saw. All right, all right, all right. AWS. Once I saw Redshift, I was like AWS. And then Docker, Linux, and CLI experience is a plus. Web UI, because this is a full stack position. And then they got their technology stack right here. Right here. Ruby, ERB, Bootstrap, SAS, Sidekick, Postgres, Snowflake, Docker, and S3. So I don't see anything. They got Google BigQuery. So they're probably using parts of Google for stuff, but I wouldn't be surprised if they're doing something with serverless in this situation. All right. So that was Dacity and Bolt. Let me go here. What you say, D? All right, cool. All right. So I want to talk about these three companies right here. One is called MFC. What ticker symbol? MFC. And then I'll bring them over to my thing, but we want to talk about the dividends that they pay out on a I can't remember it, on a quarterly or monthly basis. Let me get my link here. MFC. And then I'll bring over the Charles Schwab thing, dividends. Here we go, MFC. So, let's see, yeah, that's 2021. They are paying out. Looks like quarterly. It went from 22 cents to, well, it dropped down. Oh, this was an extra right here. So 22, 23, 22 was a little extra, and then 21 cent. We'll go back over here and you can see, yeah. So they're quarterly, right? And you can see they increase over time. And then the other company is MO. And let's look at their dividends. And we're going to talk about what these companies do. Been around since 2014, looks like. And they've been paying an increase of dividends, right? They ain't made it to their king yet, but their dividend is 86 cents, 86 cents, then 90 cents in 2021. So they almost paying $1 every quarter per share, right? Yeah. So if you had 100 shares, right, you get almost paid $1. So um, that's pretty cool, right? $10, for that. And then the last ticker symbol is ENB. And this Enbridge here. Let's look at their dividends. Again, you can see over time, they've been paying 65 cent, $2.66, right? For a total of $2.68 a year. And those are their dividends that they've been paying out. All right. So now let's go look at what they do. So again, oil and gas, we can click on the summary here. Let me see, do they give the info right here? No, new sector total return. How does it outperform the S&P 500? A total return of 26.4 in a year. In 3 years, return of 42.7%, and in 5 years, 224. The total return is the rate of the return representing the price appreciation of the stock with the cash dividend. So if you held out for this for 5 years, you'll possibly get a return in 5 years of 224%, right? In 5 years, right? So that's pretty cool, right? 224% in 5 years. Not bad. Let's go back to the other one and do the same thing. That was E N. Are we looking at ENB? Yeah, we're looking at ENB. So MFC. Look at that summary there. So not as high, but you still get in 3 years you get 52%, 52.2% in a year, 14% in 5 years, 37.6%. I like the other one better, right? uh, it's not outperforming the S&P 500, right? It's not outperforming. It is peaked a little bit right here, but overall it hasn't, right? Overall it hasn't. The next one would be MO. Up over here. MO underneath, like keep going down. But again, look at this. 1 year 32%, 3 year it's not good to hold it out, right? Get out at the 3rd year and get your 32%, or you can dump into the other one. And this one's a 5 years, it only returns 2.7%, right? But when we looked at the dividends for this, what was it? 90 cents. So you make your money in the first year to 3. Get out. Leave it in there and get out. Right? All right. So now we looked at Basis Global. I'll do that one on the other show. Let me see. Did I talk about ETFs? No, I didn't. All right, let's do this. And let me know in the comments if you like some of these stocks that we've seen, or interested in them, any of them. U.S. Weekly, Fund Flows Insight Report. Investors turn towards financial banking funds and ETFs for the fund flows week. All right, so I wanted to show this because I want to show like what type of money we're talking about here. Equity ETFs witnessed their 3rd consecutive week of net flows, taking in 13.3 billion. Right, for the first week in 4, taxable fixed income ETFs witnessed net outflows, handing back 2.9 billion this week. The conventional fund investor were net sellers of equity funds for the 2nd week in a row, redeeming $3.4 billion. For the 3rd week in a row, taxable bonds, ex ETFs, witnessed net flows of 1.6 billion. Now these numbers are going to be basically all in the billions when we're looking at this. So don't get caught up in that. Let me hop down here. All right. Let's see. Let me go. It's a set of numbers I want to show. Where is it at? Here we go. All right, here ETFs witnessed their third consecutive week of net flows, 13.3 billion. However, for the fourth straight week, non-domestic ETFs witnessed net flows taking in 2.8 billion. Right, sector financial banking ETFs, 2.4 billion, attracted the largest draw of net new money, followed by sector that other ETFs, 2.2 billion, and international equity ETFs. Right. So then they start talking about QQQ or TQQQ, and the financial sector, SPDR ETF XLF, attracted the largest amount of net new money of all individual ETFs. Right. Fixed income ETF. Let me see. Do they give you an example? Yeah. So, government treasury ETFs and so forth. iShares, um, which would be SHY, and iShares Core Total. IUSB is another one. So they're saying that the ETFs witnessed net flows handing back 2.9 billion last week. APs were net purchasers of the corporate investment grade debt ETFs, while the net redeemers of corporate high yield ETFs, minus 2.7 billion. Right. Here's another one they were talking about, MUB, and we can look all these up, but I can deacon type these out. I'll just start naming them off. Go look these up, right? And go look and see what their returns are, right? So I'm gonna rattle them off. Deacon type them out real quick. And when I say returns, look up their dividends, and I'll do one. TQQ, IVV, QQQ, SHY, IUSB, HYG, TIP, MUB, HYMB. And then we'll hop down here to conventional equity funds. They're looking at SWPPX, PWCIX. I hope you're getting this, D. LFRIX, OAZBX, and the last two, BMNIX and WMBIZ. I mean BIX. Now I'm gonna hop over here to Charles Schwab. Is it still over here? Yep. And I'm gonna go up and we're gonna look at TQQ and QQQ. Right. So if we looked up TQQ, this is what you should do. All right. So leverage not suitable for most investors. That's fine. Let me see. Do they have performance? Yes. This is what TQQ looks like. Oh, if you had invested, and what they're showing here, had you invested 10,000 in 2021, I mean in 2012, you would have been around about 1.2 million for it. Here's what their returns is looking like. Uh, Year to date, it has returned 82.98%. In the first year, 82.98. In 1 year, 107%. In 5 years, 73, and in 10 years, 61. It says since inception, I guess it averaged about 55.65. Right. And then they're showing what it looks like, right, over time, year to date to right here and here. And then they're also comparing right here the Russell 1000 growth TR. I guess it would be a fund, maybe an ETF. That may be an ETF, right? So the next one you look up is QQQ. Let's see performance. All right. So had you invested 10,000 in 2012, over that time it'll be 80,000. Right? Over time it'll be 80,000. It has a performance of 27, then 38, and then 28 for the 5 year and 22 for the 10 year. Overall, it has an average of 10% on the return. Eh, right? Right? Um, see, holdings, distributions. I should go back and look up the other one for distributions. So here's what they're showing here. You can see they are uh every every quarter, right? And they're returning about 49 cent, right? 0.4914. Let me say that. And get you your 0.14. And this is what it looks like over time. The other one was TQQ. Let me see. Did they have any type of yeah, here you go, distributions. All right. Um look like they didn't do anything in 2015 to 2018. Then they came back and they barely did any distributions, right? And it looked like they only do it once a year. It barely got it barely got any dividends. I think you probably just invested in this for performance. They did say it's a risk, right? It did talk about the risk. If you look right here, not suitable for this exchange traded product represent unique risk, including leverage derivatives, complex investment strategies. These securities are designed for daily use only and are generally not intended for to be held overnight. To find out more about trading these funds, please read here. It came up over here. We'll bring it over. And then they talk about how to do it. So this is why I like the bigger entities over like a Robinhood or a Webull. So they tell you how to leverage and do inverse ETPs, mutual funds, so forth and so on. How to invest in into things like this, right? That's what I like about it, right? And then they also have videos on, what you should do, whatever. But always seek. I'm not giving you financial advice. Always seek advice. Set up appointment as well too, right? All right. Rumble we did. Um, that'll be up for a debate. We'll debate on the next show. This is the last one. So I know D gotta have breakfast. All right, dividend funds. All right, so follow the payout announcements for mutual funds, ETFs, and closed-end funds. Posted within minutes of the official release. So here, this this site tells you like who's gonna basically what their ETFs and so forth, the ETFs, the mutual funds and closed funds, what their dividends are going to be. Right, so not necessarily what you should invest in, but what you're gonna get back if you've invested in it. And what I like about it is at least you know ahead of time, or you could say, hey, I know that this is coming. This is has been averaging over time. What that looks like again. Use your places like your Charles Schwab or Fidelity to find out what the performance looks like over time. All right. So like here they're showing like uh 0.09. Stellus Capital Investment declares a monthly a monthly dividend. This one kicks out monthly, right? So every month you'll get 9 cents. So you do the math on what that looks like. This one is a monthly share to Apollo Senior Floating Rate Fund of 8 cents. This is a monthly fund, 0.85. This one's a monthly fund at 0.76. This one's almost 14 cent. It's a monthly share, a monthly dividend, and all these right here are showing monthlies, right? So every month you'll get 5 cent, 10 cent, depending on how much you got invested into it, right? Per share, right? So if you got 100 shares and you get back 6 cents a month per share, that's where that goes. So if you want monthly dividends, this is one way to get monthly dividends. And what I do is I talked about this one and the other one, all the symbols. I'll go back through and write them all out for next week. So you'll have them, and then what I do is, instead of for next week, what I do is I post them in the community tab on who has monthly dividends and what that would look like if you had like 100 shares of them. And the reason why I say 100 shares is usually that's the minimum that you want to have, because if you want to do options on these, you would need at least 100 shares, right? So if we went and looked up NPFD, right? NPFD, right? So if you went and bought 100 shares of these, of this stock, and then you say you want to do a covered call or a put or what have you, that's where that would come into play when you're doing that, and they're showing what a performance looks like, right? Remember, you're only holding it for a month, right? So it's there's one. Well, was it? Yeah, that other one's daily, but this is for a month, so it pays out dividends every month. So you know that's pretty cool. All right. Last but not least, this is my last one. I said the last one was my last one. I lied. Rumble. We talked about the ETFs, Intel, Porsche. Um, did I talk about this? I don't think I did. It's an IPO. Just works ready for an IPO of 214 million. They filed a proposal for a U.S. IPO. The firm provides human capital management software and services to small business in the United States. Just Works produced accelerating top line revenue, 4 year operating profit, and copious free cash flow. Right. Let's go look them up. They're based out of New York. They're a SaaS platform. And let's go see some of the technology behind them and jobs. So let's hop down here. And now let's look at careers. See, team values press careers we're hiring. Okay, you got some perks. Be an owner, not an employee. Get time off when you need. Take time. Take a sabbatical. Invest in your future. Right? Let's see. They actually offer sabbaticals. Not a lot of people offer sabbaticals. It's like just take as much time as you need. You have unlimited PTO. All right. So technical operations we're gonna look at. Let me look at all positions. All right. Salesforce. That's their back end there. Uh, customer success. They're looking for a diversity and inclusion, a director for diversity and inclusion. Some of you may be interested in that. Here we go. Engineering manager, SRE, and infrastructure. Those are two what we want to look at, and possibly maybe the back end. All right, so let's go SRE database. This is a database engineer. What you will work on, how you will work. qualifications, MySQL, governing data security, Postgres, Ansible, Puppet, Terraform, AWS cloud platforms such as AWS, right? So that at least give you a little insight there. Then let's look at the infrastructure. It should be pretty similar. So let's see. Yeah, extremely sensitive data and compartmentalized, secure, fault tolerant. It doesn't say in this one. Don't say if they're just AWS or not. Let me see. Yeah, here you go, right here. So Elasticsearch, Kafka, InfluxDB, Redshift, Jenkins, Nagio, Circle CI, Git, AWS. So they're all at AWS workshop, right? And let's see anything else that's staff data. Yeah, they got a whole slew of jobs, right? They got a lot of jobs. They got a lot of positions that they need to fill. Uh, that's up in New York, and this is what the team looks like already. So, um, filling this many positions is a lot. That means they got some capital, um, and to hire people. Now, what the rates are, I don't know. I couldn't tell you on that. I don't know about the rates, right? I don't know about the rates. When I say rates, your salary income. Right? I think I covered everything I wanted to cover. We did Rumble. We covered startups, the dividends, the dividend funds. We showed the monthly dividends, like 9 cent, 10 cent, right? Um, Intel covered Intel. We covered Nancy Pelosi, and that was it. That was everything. I got two other links up here that's debatable. I don't think we need to do those. Let's let me double verify so then cross over into the other show. Yeah, this can go on the other show. It's about Jack Dorsey. Yeah, we're good. All right. So that was everything I saw this week. There are other stuff that I didn't write down that I did want to talk about. The show for that's coming up. We're gonna really get into some stuff. I kind of really focused in on that show. I kind of honed in on that. And wanted to make sure we do, you know, I covered that. D, I'm not sure what you mean when you say cover. I'm not sure what that means. Just Jay, how you doing? Q4, I saw you in the comments. Code and Evelyn, I think Dion took care of you. It's everything. All right, so be back in 30 minutes. I didn't want to go too much over, but we got started late. All right, I'll see y'all in 30 minutes. Y'all be safe.